We are going to be talking about Bitcoin price, and we're going to be talking about 3 reasons I believe the Bitcoin price is set to explode. This is based on some news that's come out here in the past 24 hours. Ladies and gentlemen, welcome back to the channel. We're going to be getting started here in about 1 minute. So make certain that you have pen and paper handy. Be prepared to be able to take some notes, grab some links. If you've got your phone handy, that may be great as well. I've got a couple of videos I'm going to show you today as well. Other people's video, and there's one video I'm going to show you today that I did back 6 years ago that sort of back up some of the news stories that we're going to be discussing. Now, the news stories are very, very recent, but I want you to understand, particularly if you're relatively new to crypto since the last bull market, there are some fundamental factors at play right now that I believe are destined to be able to pump the Bitcoin price. So you want to be aware of this, you want to know about this, you want to be watching this when it comes to the news. Ladies and gentlemen, also later today, just a quick heads up, later today I'm going to be doing a video covering some of my passive income streams for the past month, for the month of March, and I'm going to show you exactly how much I earned. Spoiler alert, it was quite a bit. It was a very, very good month, and so you're not going to want to miss that. All right, let's go ahead and get started. By the way, ladies and gentlemen, as you come into the come into the live stream, do me a favor and smash that like button. Good morning, Mind of Tron. Let's go ahead and get started. Let me just pull up my screen here so I can see what we got. All right, here we go. First things first, very, very quickly, by the way, we'll probably be running about 30 minutes today. I have an appointment that's going to be coming up that I have to hop on another meeting related to real life stuff. It's not always as fun as crypto stuff, or at least it doesn't make me as much money as crypto does. All right, let's get started. Bitcoin price sitting at 69,000. We did cross over 70,000. I saw last night in the middle of the night. Currently, the market cap for Bitcoin is 1.3 million. Ethereum is sitting at $3,550, ladies and gentlemen. I'm waiting for us to break 4,000. Like, I feel like that's going to be happening in the next 2, 3, 4 months with Ethereum. But today we're talking about Bitcoin. Bitcoin is going to be the star of the show. All right, this is just this is my Bing trading. I don't know, I still had this up. This is my Bing trading account, by the way. If you want to follow my journey, copy trading on BingX, go down in the description. You can subscribe to that email newsletter and get updated. But I'll be covering updates with BingX, with liquid loans, and all of the other passive income strategies that I was using for the month of March. I'll be putting that in one short, concise video later today, so stay tuned for that as well. All right, 3 reasons I believe Bitcoin is going to pump. Number 1, there's $100 trillion investment class. By the way, that is 100 plus 12 zeros, ladies and gentlemen. Count them yourself, 12 zeros. $100 trillion, 100 trillion. That's an insane number. $100 trillion investor class starting to move into Bitcoin and crypto, says Bitwise CIO Mark Hogan. Now, just to recap what he's saying over here, basically saying, hey, we've already got 12 billion in, but there's, tens of trillions, most likely about $100 trillion of available assets that most likely at some point over the coming years will move into Bitcoin. Now, we're not saying the entire market of those investors is $100 trillion and they're going to bring all that in. Ultimately, $100 trillion would be the percentage of their portfolio that would go into some asset. We're talking 1, 2, 3% of the portfolios of very wealthy investment managers, hedge fund managers, those types of people, and really retirement funds, that would hold 1% or 2% or 3% of their entire portfolio in something like Bitcoin as some sort of a hedge. Now, why would they want to hedge? We'll be talking about that here in a moment. But listen, if you're new to crypto and you've been seeing crypto as only speculation, it's important to understand that someone like Michael Saylor is not looking at Bitcoin only for speculation. Michael Saylor is looking at Bitcoin as a hedge, as a bit of an insurance policy. No one is buying 1% of their portfolio in Bitcoin because they're betting on it going to the moon. No one is putting 2%, 3% in because they expect it to go to the moon. Even even those of us who really believe in crypto, like you probably shouldn't have more than about 10%, at least initially. You should not. Now, I say initially because, okay, I'll give you a tip on my investment strategy. Many of you may know this. I start out with a small amount of my total portfolio that I put into cryptocurrency, even in my HODL wallet. I DCA a small amount. But as crypto goes up, the price of crypto goes up, as my passive income streams compound and continue to grow over time, because I'm not building for the short term, I'm building for the long term. My overall, if you look at my HODL wallet and everything, my overall position in crypto is significantly more than the small percentage that it started out with. Now, for me personally, because I'm very biased on this space, I'm very bullish. I'm a cryptocurrency enthusiast. I'm not a financial advisor. But for my personal funds, I don't rebalance my portfolio. That's what these major hedge funds do. Every time Bitcoin pops a whole lot and it's too high of a percentage of their portfolio, they rebalance. I personally don't rebalance my crypto portfolio. That's the difference in someone like me and a lot of other cryptocurrency investors who are betting on the future of this technology, and we believe that crypto can potentially, because of what this technology can do, we believe that it can produce potentially a life-altering amount of wealth. Those of us who believe that, we're not trying to rebalance our portfolios and keep it only 1%, only 2%, only 3%. We are using a small percentage of our portfolio and we allow it to continue to compound and grow over time without risking the rest of our portfolio. We're not taking total degen bets either. That's very important that you understand that. But so obviously we have a lot of funds coming into crypto, and they're going to be using Bitcoin particularly as a bit of a hedge or an alternative instrument. And there's very good reason for this. So reason number one, I want you to understand why Bitcoin's going to explode. We'll continue into why people will use Bitcoin as a hedge. And I know some cryptocurrency investors who are here primarily for price appreciation, primarily because they heard about it from some friend, primarily because they saw it on some YouTube video or they saw it on Twitter. I know a lot of people don't understand how in the world Bitcoin could be a hedge. We'll get to that in just a moment, I promise you, in today's live stream. But the number one reason so far, or the first reason so far, that we can expect that Bitcoin price is going to explode is because there's still $100 trillion that could potentially be moving in to Bitcoin, according to Bitwise Chief Investment Officer Matt Hogan. Now, why would people want to use Bitcoin potentially as a hedge? Now, this is where you want to be paying attention. If you've zoned out, come back, pay attention to this right here. $677 billion added to the U.S. national debt in just 3 months. In just 3 months. Now, this is important because this is coming from BlackRock CEO. He warns the situation is more urgent than I can ever remember. Ladies and gentlemen, when BlackRock, one of the most powerful corporate entities, one of the most powerful investment firms on the planet, says that we have an urgent possible crisis, $677 trillion added to the national debt. That is something to pay attention to. So what does that mean overall for the price of Bitcoin? Right here, this news story. Here's why record levels of U.S. debt will propel Bitcoin to greater heights, according to Strike CEO Jack Mallers. Now, we're going to read through this very carefully. By the way, ladies and gentlemen, as you come in, do me a favor and smash that like button. All right, smash that like button and say good morning, say hello. I'd love to hear from you. All right, so let's get going. I'm going to read through this because it's very short, but it pretty much sums it up. The CEO of Lightning Network Wallet, Strike, says that the U.S. government's rapid debt accumulation will be the catalyst that sends Bitcoin to greater heights. In an interview with Bloomberg, according to Mallers, he sees the government eventually turning on the money printers and issuing more dollars to meet its financial obligations. So our government is in debt. Traditionally, if I owed you $20, I'd have two options. I'd one, have to default on that. The other is I could pay it back. Those are classically the two options that anyone in debt has, right? Now the government because they are centrally planned and control our currency, unfortunately, has a third, and that's that they can print more money, devalue the debt that they have and that they owe, and allocate more capital to themselves, so our government can't default. The United States of America cannot default on its debt. It would collapse the entire planet. Most people do not understand this. It would collapse the entire planet. If we can't default and we can't pay it back, what's the only option that they have to do, no matter what they say and tell you at the Fed chair meetings and all the economists? They have to issue more dollars. They have to issue more dollars. Now, if you do not understand why the U.S. government cannot pay off their debt, meaning why can't they just, make good decisions over time and eventually get out of this debt? It's not just because the number is too high. That's what most people don't understand. Most people say our debt is too big, we'll never pay it off. And the reality is we have a system that was designed to only exist with debt. And politically, what ends up happening is this debt snowballs and it gets bigger and bigger over time. So Mahler says, with more dollars in the system, he believes that the surplus of fiat currency will find its way into assets with limited supply like Bitcoin. And so if there's going to be more pieces of green paper, you want them competing for the most fixed thing. There's more dollars that are competing for a fixed amount of Bitcoin. Yes, real estate is going to go up too because there's more dollars competing for real estate. But they can make more real estate, meaning they can develop more land, they can build more houses. They can find more gold. They can't make any more Bitcoin. They can't make any more Bitcoin. And ladies and gentlemen, Bitcoin's deflationary. People don't realize that. Because the supply is limited, when people lose Bitcoin, when people lose their private keys, they lose access to wallets, stuff like that, that there's no getting those private keys back. So essentially, there will never, ever be 21 million is the max supply of Bitcoin, but there'll never be 21 million Bitcoin in circulation that people have access to because people have already lost wallets. Heck, I've lost private keys to a wallet before. Thankfully, it didn't have hardly anything in it, but I did, and other people have as well. So that means that in one respect, Bitcoin's even inflationary, but worst case scenario, it has a fixed supply. And so when I tell you that people are right here, people are using Bitcoin as a potential hedge, this is why you have central banks, like even a small country like Bahrain, they have 5% of their central bank reserves. People are not aware of this. They have 5% of their central bank reserves in Bitcoin. Why? Because they understand that the U.S. government has to ultimately keep inflating the U.S. dollar, and it's happening at a rapid rate. Now, they adjust the numbers, and they always tell you inflation is only 3%, 4%, 5%, but they keep removing certain costs. Like they don't even calculate the cost of energy and the cost of housing in those inflation numbers. And when it says over here that it says that they basically were now the government essentially they have to, where's it at? Somewhere in, it says they have to devalue the debt they have that they owe. Now, for a lot of people, they don't really understand what that means. How do you devalue the dollar? What it's saying is when you print more dollars, eventually, as those dollars circulate into the economy, those dollars buy less goods. For example, if you go look at the price of gold, 80 years ago, an ounce of gold 80 years ago would buy roughly the same thing that an ounce of gold will buy today. Meaning 80 years ago, hypothetically, I don't know what the price of gold was without looking at a chart. Let's say it was $80. Maybe it's $20 or $10, but whatever it was. Let's just say that whatever you could buy today, I think gold is just over $2,000, around about $2,000. Today, what you would need $2,000. You would need $2,000 to buy an ounce of gold. You would also need $2,000 to buy, whatever. 80 years ago, that $80 ounce of gold, that same $80 would buy what $2,000 would buy today. That's what they mean. They devalue the debt. They devalue the dollars. And the reason that's a problem, and the reason, if you're a big company like Tesla, like MicroStrategy, or if you're a country like Bahrain or El Salvador, and you're worried, or China even, and you're worried that the U.S. government could devalue the dollar over time, and you're holding a significant portion of your reserves in dollars, you realize you're going to be disadvantaged because you're losing the purchasing power of those dollars. This is why people are recommending own 1%, 2%, 3% of your portfolio in gold, and people are also starting to recommend 1, 2, 3% of your portfolio in something like Bitcoin. It is a potential hedge. Now, if this is still a little bit confusing to you, I'm going to show you what is literally the best documentary I've ever seen that explained this to me once and for all. It's middle school level, so it's really easy to understand, and it explains economics and our current economic system better than anything else I've ever seen. A link to this video is down in the description, but it's called Money as Debt. Money as Debt, a full documentary. I put this on my channel, gosh, 6 years ago. 6 years ago. And what it explained back then, it still explains today. It is still relevant. It is simple. It is easy. I recommend you grab something to drink, grab something to eat, and watch this documentary from beginning to end. By the way, this quote was on the very beginning. The process by which banks create money is so simple that the mind is repelled. I think it's such a great quote. This was by a major economist from a while back. But it's such a great quote because most people do not realize that banks can literally create money, and they don't understand how that works. And it boggles the mind. Like when you first watch this documentary, you're like, what? That cannot be. This documentary is one of the things that helped build my conviction of where I thought the price of Bitcoin would go long term. By the way, ladies and gentlemen, thank you so much for being here. If you haven't done so already, do me a favor and smash that like button. Okay, so reason number one, I think Bitcoin price is going up is because we have the investor class, $100 trillion potentially in the investor class that's moving into the Bitcoin ETFs. Also, our debt is ballooning at an exponential rate. It is getting higher and higher. That is reason number two. Reason number three, a lot of people don't realize this. Almost every major Bitcoin bull market involves Tether buying more Bitcoin. Almost everyone. Now, if you don't know what Tether is the private company that essentially owns USDT, and there's a lot of, I don't even know what to say right now. There's a lot of people do not believe that Tether has all of their Bitcoin back. Tether can essentially print money to buy their own Bitcoin. They have been accused of this. The best video that I've seen explaining this in depth is 35 minutes, and it is very entertaining. And it is exposing Tether, Bitcoin's biggest secret. I have a link to this down in the description of this live stream as well. Ladies and gentlemen, it is very, very good. But here's what I want to say about this news story. Tether, this was earlier this morning, Tether boosts Bitcoin reserves with the latest acquisition. This is very, very common for them to buy Bitcoin, and it's a major indicator when a bull market is coming historically. So I believe that this is just further confirmation that there is a big price spike coming. So I'll recap this real quick, then I got a couple of quick news stories I want to cover for you. One in particular has to do with the SEC and a major lawsuit. So 3 reasons Bitcoin, I believe, is going to go up. First of all, the investor class is moving in. Second of all, the U.S. government debt is exploding. And the third reason is Tether is buying Bitcoin. When they are printing Tethers, buy more Bitcoin, that is almost a sure sign, not financial advice, but it is almost a sure sign that price is going to freaking explode. Mind of Tron said he's still listening. He's working. Thank you so much for being here, Mind of Tron. I appreciate you too, brother. Do me a favor, ladies and gentlemen, if you haven't done so already, smash that like button. Say hello, good afternoon, good morning, wherever you are at. Let me see that you are here. And if you've missed this live stream, I've covered a lot so far, including one of the number one reasons, the number one videos ultimately years ago that helped convince me that Bitcoin was going to go up to $1 million or more. So go back to earlier in the live stream so that you can watch that and catch all that. You don't want to miss any of that. All right, moving on very, very quickly because I've got another appointment I need to get to. But Binance is about to launch support for a new stablecoin product. This is important. I've been talking about this for a while. Personally, I'm not a fan of stablecoins. I don't necessarily think that we need them. However, I said that's from a sort of a theory in my head. Like I wish we didn't need stablecoins is what I'm saying. But I do understand that people like to, as a trader, people like to take profits in stablecoins. I get it. I do it as well. The challenge is all of our stablecoins currently are centrally controlled. So they are going to be exposed to government regulations. If the government comes out, if any governments around the world come out with their own central bank digital currency, they're probably going to regulate every other stablecoin. That means you're forced to use the government's central bank digital currency or the government's backed US dollar stablecoin. Now, for a lot of us, that goes against the decentralized narrative. That goes against economic freedom when we have to rely upon the government who can monitor, manage, confiscate, hold our stablecoins on their own private blockchain. So when I saw this, it immediately caught my eye. This just continues to prove the case. Someone like Binance, who has had literally issues with their own BUSD stablecoin, where the government essentially forced them in a position where they couldn't use their own stablecoin any longer. Now they're saying their launch pool announces that they are going to be supporting a new Ethereum-based synthetic dollar protocol. This is very, very interesting. The project, by the way, is Ethna. How do you say that? Ethna. I am aware of this project. I have not spent a lot of time researching. It's some sort of a logarithmic sort of stablecoin. It is backed somewhat. The yield on it is about 35%. So this is right in my alley. I love anything. And if you go look at the historical yield, it's been between 20 to 50%. So this is right up my alley, both because I like the whole non-centralized stablecoin aspect and because it pays a great passive yield right now. The problem is it's on the Ethereum network, and everything is just so expensive on Ethereum. I almost feel like you need to have like $10,000 or more on Ethereum because it's so difficult when you're making 35%. So you make, in 3 or 4 months, you're going to make $1,000. Great. If you want to withdraw that, it's going to cost you, by the time you complete all your withdrawals and everything, somewhere between $50 to $100. And that really starts cutting into your returns. It's a pain in the butt. So I don't operate a lot on Ethereum, even though I like Ethereum. I trade Ethereum. It's more volatile than Bitcoin right now. However, that's the main reason I've not been in this project. I am aware of it. I came across it the other day. But the main reason I wanted to point this out, I came across it maybe a month ago, 2 weeks ago. The main reason I wanted to point it out, though, is this lines up with the stablecoin narrative. That's what I've been saying about liquid loans. Everybody likes the idea on the Pulse chain network that you can take your Pulse and take out a loan against it. But you take out a loan in the stablecoin. The stablecoin APR over here, this thing is paying out 182% APR. Now that's average since the beginning of the year. So it's not quite that high right now. You can come to analytics and kind of see what it is. But so the weekly is down, 96% APR on a stablecoin. So that like you would definitely need to want to understand this protocol before you interacted with it too much. But coming over here, coming to a decentralized exchange like Pateus or PulseX and buying some USDL, which is valued right at $1, they're basically creating their own collateralized stablecoin. That's why they have the whole redemption model. Everything is all about keeping this thing pegged right close to $1. Very unique protocol, strong decentralization, meaning it's decentralized by about 98% right now. Once they get their Fetch Oracle completely decentralized, it'll be totally decentralized. I'm not endorsing the product. I'm not recommending the product. I'm just telling you products. One of the things that I like about this that I think most people miss, people love the loan token. They love the fact that they can borrow against their Pulse position without selling their Pulse, and all that's phenomenal. What I'm most excited about is we have a stablecoin that is not centrally controlled, and we have a mechanism to keep it really closely pegged to $1. I think that is absolutely incredible. Now, this is still early, of course. We're just a few weeks into this. But if this continues to do well over the next year or two, I believe this protocol, same thing with Power City, which is a similar protocol, kind of a twin, if you will, sister protocol. I believe their stable coins, I believe it's going to be incredible to the entire ecosystem. And I believe there's a very real possibility the stablecoin narrative, the decentralized stablecoin narrative on liquid loans and on Power City over here in the Pulse Chain ecosystem, I believe could potentially attract some capital. The right people aren't looking at it right now, but there are some enormous funds behind some of these projects on Ethereum, for example, like Ethna, for example, that I believe that if they saw what was going on over here, they understood what was going on over here, I believe it could bring a tremendous amount of funds in. And if it did, it would lower our APR, by the way. But right now, we enjoy that APR. All right, next up. I'm just taking a quick look. Somebody's speaking in Russian. I think that's Tomaz. Sorry, man, I can't understand that. Pro Beach Bum says, good morning. Good morning, sir. Good morning. All right, next up, I got to show you this one because I just agreed with this so much. Tron argues the SEC is not a worldwide regulator. It's not a worldwide regulator. Before I go into this, ladies and gentlemen, let me just say this. This is a great picture. I don't know if this is AI generated or what, but it is a great picture. Little SEC thinking that they're like white knights, and they're not. By the way, do me a favor, if you haven't done so already, smash that like button. Also, stay tuned later today. You can subscribe to the channel. I'm going to be putting out a video later today covering my portfolio from some of my passive income portfolio from March. I'm going to recap where I started the month of March at. Spoiler alert, not everything was a winner, but overall had some great passive earnings in the month of March. So I'm going to go through my portfolio, show you where I started at, show you where I ended at, and I'm going to continue to do this over time on my channel as well. All right, let's talk about this for a minute. So I've been trying to figure this out for a while. Basically, Tron, if you're not familiar with Tron, it's currently based in Singapore. At one point, I think it was based in China. Justin's son is the founder of Tron. I used to use the Tron blockchain a lot a long time ago. Used to be some incredible passive income opportunities on there. Those of you that are in the dividend casino space, I mean, that's one of my. Actually, I did not add that to my spreadsheet. I'll put it on there next month. But the dividend casinos, they started on the Tron blockchain. I mean, Mind of Tron remembers that, hence why he has his name. Is because Tron was so incredible back then, and it still is probably pretty incredible, I guess. But Justin's son has his own share of problems. He's a bit of a pretty unique individual. Let's just leave it at that. But they're arguing in U.S. court that the SEC does not have a right to regulate them, even though they have parts of their entity. They bought some companies that are here in the States. They're basically saying, hey, we're not a U.S. entity, and the majority of the users on our platform are not even based in the U.S. is essentially what they're saying. I've yet to figure out why the world is allowing the SEC to wreak havoc on foreign entities, and for that matter, even the Commodities Future Exchange. I don't understand why they are allowing this to happen. I mean, the world, what is it called? The world, not the World Bank, the world, I'm trying to remember. There's a World Economic Forum, no, World Trade Organization. Yes. The World Trade Organization has come out several times and essentially sued or went on record and said that the U.S. was violating World Trade Organization agreements, one of which, by the way, was with online poker years ago. They basically said, hey, the U.S. can't do this. They are using their banks to interfere with foreign entities, and they can't do this. They have said things like this several times, and the U.S. government just ignores it. Like, who cares? Whatever, not a big deal, and they just ignore them. But for some reason, world governments, other country governments tend to keep cowering down to the SEC, which is not even, the SEC is essentially a regulator. It's not like it's even Congress or the president. It's just a regulator writing rules without even clearly defining the rules. This annoys me to no end why they're allowing this to happen, but they are. Somebody obviously knows something that we don't know. That's for certain. But I like when I saw this, I thought, okay, I got to cover this because I can't help but agree with this, and I know that many of my viewers, many of you agree as well. The SEC is just overreaching. They're not protecting any of us for the most part. They're hurting our crypto bags. They're hurting us. They're trying to create regulations that can prevent us from investing in crypto freely the way that we want to, which, by the way, is one of the reasons that I trade crypto and I got into trading crypto. And I do some algorithmic trading with trading bots. I use copy trading like BingX and stuff like that. Part of the reason I do stuff like that, or I first got into that kind of stuff, because originally I was sticking with only decentralized sort of type projects. I was trying to focus on that, at least for my longer term plays. But what got me to starting trading on exchanges, because for the longest time I was resistant to open an account on an actual exchange and keeping funds there at all. But what made me consider it a little bit more is recognizing that a lot of these strategies, like algorithmic trading, like trading options, for example, those strategies will probably be more viable long term than, say, yield farming. I could see yield farming getting scrutinized, getting made illegal in some way by the SEC or some regulating body around the world. I could see that falling by the wayside. Staking crypto, I could see that falling by the wayside. And not that I agree with it, but I could see it getting regulated a lot quicker than using some sort of typical, old school type broker when you're selling options or trading against it. With that being said, I'm diversified. I do the very decentralized stuff, but I also do, cryptocurrency trading, copy trading, that kind of thing as well. Again, anyone bridging over into Degen Chain? I am not, Lou. I'm not bridging over to Degen Chain. I got to where I try to stay away from bridges as much as I possibly can overall. Ladies and gentlemen, thank you so much for being here. I absolutely appreciate it. Do me a favor on the way out, smash that like button. Looks like we're going to break 70,000 again anytime within the next hour. I believe that's going to happen. I've got to run. This live stream isn't that long. I'm out of here for now, but stay tuned for my video I'm going to be putting up later today where I cover my portfolio, my passive income portfolio for the month of March. Thank you so much. Decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.